Bunch of bank earnings to get to this morning. We'll start with shares of Morgan Stanley up in the pre-market. Beats on both the top and the bottom line. Same goes for Citi. On the flip side, Wells is falling. The earnings beat, but revenue slightly below projections. The bank says it would be helped by rising interest rates, but aggressive Fed actions and the war in Ukraine add to downside risks. We'll end up with Goldman here after reporting better than expected Q1 profit and revenue. The Wells story is actually the outlier is the credit tailwind as opposed to the build.
Yeah, Mike, the club owns Wells. We're up huge on it. I was disappointed. I was disappointed because I don't want to hear from Charlie Scharf that America's National Bank has a Ukraine problem. I don't want to get to I said last night on Mad that I felt that J.P. Morgan was very forthcoming about Ukraine. I did not expect Scharf because Scharf has no real European exposure. I did get, without Goldman really saying it, because it always sounds awful to be, let's just say, an opportunist about the war, that if you are worried about Ukraine, you came to us. And that was true, and it was a big reason why they had a good number. Now, on the other side, people say wealth management was supposed to be really good, but the stock market did go down, and they are very levered to that. Expenses, which everyone was worried about, were terrific.
Yeah, down expenses down 18.
Very impressive. So I think this is the quarter where Solomon said, I told you I can adjust my expenses. You didn't believe me. I told you that I had a stream of revenue that is really kind of consistent. You didn't believe me. I told you that our capital markets will do well no matter what. You didn't believe me. I won all three checks. That stock goes higher. And let's not forget the book value. Wow. I mean, you're talking about a book value of $293. And that's a pretty clean book because Goldman scrubs everything. So Goldman's the star of the day.
Yeah.
And I like Morgan Stanley. Club owns. I thought it was a great quarter, but Goldman's the star.
It does seem like the investment banking down 38 at Goldman, down 37 at Morgan Stanley. Pretty priced in.
I thought so. But return on equity higher than Morgan, higher than J.P. Morgan at 15, not priced in.
Other thematics were light tax rate pretty much across the board.
Yeah.
Made things a little easier.
That's true. That's true. I don't know. In the end, Goldman and Morgan Stanley are both going to be good today. Citi, I found confusing that it's up because other than a decline in Russian exposure, I didn't see that much that's that good. That still is a proven situation. And, Carl, I'm getting tired of seeing this tangible book there of 79, stock at 50. How tangible? Because that is, and remember they said they had to back off from the buyback.
Yep.
You know, I've not seen that degree of difference between stock price and tangible book other than when you start getting into the Cal-Fed, Glenfed era. Obviously, this is a more solvent bank than those. But Washington Mutual, these were all banks where the book value was overstated. I want more information. I want everything in that book value explained to me because this should not be. You mean to tell me that if Citi closed today, that I get that 79, which is what book value really is supposed to mean when it comes to a bank?
Right.
There's something fishy there. I don't buy it.
Interesting. By the way, speaking of expenses, down 18 at Goldman, at Citi up 10, which was a bit of a surprise as well.
I don't like that either.
Yeah.
But look, I'll be honest. Well, no, not that I'm dishonest, but Charlie Scharf is a guy I banked on when we bought the stake for the Channel Trust. It is, again, we're up huge. But I made a mistake not selling it at 54.55, and that was because I thought this is the beginning quarter, and the cap would come off from the Fed that was put in the first week of February in 2018.